Stock futures were flat in overnight trading following a losing session to kick off the holiday-shortened trading week. Futures tied to the Dow Jones Industrial Average dropped 18 points, or 0.05%. S&P 500 futures and NASDAQ 100 futures hovered near the flatline. Interactive brokers lost nearly 3% in extended trading after posting fourth-quarter adjusted earnings that fell short of expectations. Stocks finished lower during Tuesday's session as fourth-quarter earnings season gained steam and the yield on the 10-year Treasury note marched back above 4% after commentary from Federal Reserve Governor Christopher Waller warned easing monetary policy may come slower than anticipated. The Dow fell 231.86 points, or 0.62%. While the S&P 500 and Nasdaq Composite slipped 0.37% and 0.19%, respectively. So far, traders are pricing in a roughly 65% chance that the Federal Reserve begins cutting rates in March as hopes mount for a pivot, according to CME Group's FedWatch tool. Fourth-quarter earnings gain steam this week and could serve as the next major test for the market that could dictate the setup for 2024. Investors have already pored over results from major banks, including Goldman Sachs, Morgan Stanley and Bank of America. This reporting period may lack the splashy earnings recession over headlines we got last quarter, but it takes on added importance because it sets the tone for 2024, said Jeffrey Buchbinder, chief equity strategist at LPL Financial. After 2023 was a year in which improving valuations delivered strong gains, this year, earnings will likely have to do the heavy lifting. Wall Street awaits December retail sales due out Wednesday. The findings could offer further insight into the health of the consumer or contribute to growth concerns should spending ease. Economists polled by Dow Jones are expecting retail sales to rise 0.4% in December, up slightly from 0.3% in November. Earnings season carries on Wednesday with results from Charles Schwab, U.S. Bancorp and Prologis. The Federal Reserve's beige book and business inventories for November are also slated for Wednesday, along with remarks from New York Federal Reserve Bank President and CEO John Williams. The market looks overvalued by about 9% to 10%, according to Aswath Damodaran. The expectation game has turned against the market, the professor at New York University's Stern School of Business told CNBC's Closing Bell on Tuesday. Markets shocked investors in 2023, defying expectations for another rough year. Now, he fears that the markets turned too much in the other direction, believing that inflation's under control and the economy's skirted a recession. This year, good news is going to require a lot more than it did last year, and that to me is why I think stocks are in a dangerous place right now, he said. Shares of interactive brokers slumped nearly 3% after posting mixed quarterly results. Revenues came in at $1.15 billion and slightly ahead of the $1.